Peak Oil and Gas is launching its $55 million initial public offering, making it the largest float in the oil and gas sector this year. The company will spend its IPO funds on start-up costs for its Codlau project. And Sky News business reporter Julia Wood met with the managing director for more.
The offer will be opening next week, in a week's time, after the exposure period for the prospectus. We'll close that off early November and it be listed on the ASX by mid to late November. We're expecting about the 25th of November to be listed.
Now, your first capital raising brought in $10 million when you were only expecting about $8 million. So you must be feeling fairly confident going into the IPO that it will be successful.
We are. We thought it was a great endorsement of the team that's behind Peak and of the strategy we put together, and also the asset base that we've amalgamated over the 18 months that we'd actually been incorporated. And that was actually done at a very difficult time in the market. If you remember, our understanding anecdotally was that smaller IPOs were being pulled because they couldn't raise the sort of $3 to $4 million they were seeking, and yet we were oversubscribed from a private point of view, which I think is, as I said, is testament not only to the company but our financial advisors, Emerald Partners, have been instrumental in managing the capital raisings right through to this point, and they remain our advisors now going into the IPO. So from that point in time to now, we've seen, we believe, the market improve. Certainly the oil price has strengthened and looks to be firming up further. And we believe that this next quarter is a fantastic time to be listing on the ASX.
Now, this IPO has been expected for some time. I know that I've been calling for about a month to try and work out when it was coming online. So what was behind the delay?
Well, the delay is more procedural. It's in terms of getting the reports together. One of the reasons that we're different from a lot of the IPOs that have come in the energy sector, but also, I guess, across the wider resources sector, is that we're not just raising money to explore. We're raising money actually to fund a project which is going to produce cash flow. And because of that activity and that asset, we needed to certify the reserves. And that certification process takes time because people look right into all the technical aspects of the field, of your development plan, they forecast oil price, etc., look at the cost base that you're predicting and make sure that the reserves that they're actually calculating are commercial reserves. And so that process, which we wanted to do right and make sure it was right, took a little bit of extra time, and so we'd rather get it right and be delayed than try and accelerate that.
With the IPO, you seek to raise about $55 million. How much of that will actually go towards the startup of Codlau? Prior
to first oil, we're committing up to $35 million of that, and that will get the project finalised from an engineering and project management point of view to the point where we can drill the first wells, and that capital will actually help us drill those wells. So first, in terms of our capital raising, a large portion of it is earmarked for that project. There is ongoing capital beyond first oil, which actually operates the project and drills subsequent wells, and that's in excess of that $35 million. But that's actually going to be funded partly by the cash flows that come in from the oil sales.
Now, this site has already been developed. Why was it taken offline?
It went offline because the revenue stream that was being derived from a declining oil stream in a low oil price environment, which was only $19 at the time, this is in 1991, crossed over with the cost curve effectively, which was generated or being driven by an FPSO, floating production, storage and offloading system. Those are quite costly and are usually earmarked for very deep water and for much larger reserves. So the fact that they had an expensive capital base and declining oil price actually caused the project to be abandoned early, actually, because it was still producing a couple of thousand barrels a day of oil. The key to this, really, for Codlau, is that they developed the field on the basis of 2D seismic, which had missed the crestal parts of the field, and then with new technology that was subsequent to their time, they imaged the up dip areas of the field, and we're going to actually drill wells into those crestal parts and produce what they term attic oil. So this is part of the delay. We come back to the question you asked before, is that we wanted to make sure that the seismic tied into the petroleum engineering and assured ourselves that we've got that residual oil there, the attic oil, and that it is sufficient quantities to make a very attractive project, which it does, with an IRR in excess of 100% and payback with only 3 months of investment. So it's a very attractive financial project, and it also provides a hub in that very prolific Palawan Basin area, which we can then use to tie back other discoveries that we find in the area. And that's quite exciting for us as well.
Now, you plan to use the revenue from this project, don't you, to fund further exploration?
Yes, we will. So in addition to the funds that we're raising in the IPO, which part of those are earmarked for our exploration portfolio, the cash flows that accrue from Cadlau will also be reinvested into the company, into the existing portfolio we have now, which is a number of high-impact sort of exploration targets that we have. Plus, we'll be able to acquire new exploration and appraisal and even potential production opportunities. So the company, the management team, is driven to build the production base of this company. We're starting life effectively as a producer in sort of 9 to 12 months of listing, and we definitely want to then increase production and make sure that we actually replace reserves and increase value in this company to occupy that mid-cap space, upper end of mid-cap, which is quite empty just now. So we should start life at about $100 million market cap. There's very few companies, say, north of 300 to $1 billion, and that's exactly the space we believe that we can occupy with the sort of strategy we've got, the team we've got on the ground, and even the assets we've got in the company at this stage, and the pipeline of opportunities that we have waiting for us once we've listed.
Now, of course, it is quite unusual for IPOs to start off with production and then move to exploration, as you said. Do you think that this will help you going into the IPO market?
I think it does. Because I think investors, particularly, I think Australian investors in the energy sector, are sophisticated and experienced, and they've obviously got lots of choices of investments. To put your money into pure exploration, depending on how much you're raising, etc., can give you good leverage. To put your money into simple production can give you good returns, but maybe not the leverage. Where Peak, I think, is if you like, optimised for investors, is that we've got both. So you're putting your money into a company that's able to generate enough cash flow to develop and explore in its portfolio without having to go back to the investors in the future quickly to top up again. And that's the difference. That's the differential I make with in some conversations, is that if you just have a pure exploration company, then win, lose or draw, you tend to come back to investors to top up again, which dilutes the original investors. We're trying to avoid that, and we think we can with Cadlau producing the sorts of cash flows that it's predicted to do so.